and welcome to India Market Open. It's been a euphoric day of trade yesterday, guys, but will we or won't we is the question. Longer working hours, are you guys up for it?
Well, I'm not up for longer working hours for sure, but I must say, amidst all the chatter that we'll do, Samina, today about the markets, to my mind, I agree with Tamanna. The most interesting story and the most mind-blowing story is related to the mind, Tamanna.
Yeah, I mean, when I saw this morning Elon Musk tweeting that the first human trial of Neuralink has happened, I was like, whoa, now you have come into the future. A chip implanted in the brain which will allow you to control all your devices without speaking, typing, just by thinking. And you've seen the first human trial. This is a game changer.
I mean, listen, at some point of time we knew by virtue of AI, etc., and the advancements that science is making, that we'll reach a stage wherein you will send in a text message without having to actually type it. I mean,
you know, there was so much debate about how Alexa, Instagram, WhatsApp was overhearing conversations. I don't know if you guys remember the joke that went around where Alexa was the one. And that was nerve-wracking. We just made peace with that, and somebody controlling your mind, I don't know how comfortable I am with that, to be honest.
You were controlling the device with your mind. The idea of...
The device is not controlling my mind.
The idea always was for this that people who are paraplegic or cannot move or speak at all should still be able to communicate.
Use technology, yeah.
And they did it first with chimps, and now the first human trial has happened.
My only worry is all that data that they're going to collect could eventually, but nevertheless, yes, we will go with the positive.
Yeah,
it's a great advancement.
It's a great advancement. There is no stopping AI.
Yes, there's no stopping AI.
No stopping human control of devices. Literally your phone in your head.
Yeah, it'll be exciting for sure. But yeah, Samina is right. The market was equally exciting yesterday.
And talking about mind-blowing, look at the US markets overnight. 6th consecutive day of record highs for the S&P 500 and the Nasdaq. The Dow weighed a little bit by Boeing, etc. But you have had... an incredible run in the US markets, and we should pull up where they closed yesterday. So a whole host of factors to look out for. Obviously, your big earnings week in the US, all your biggies, your Meta, Alphabet, all of them come out with numbers, Apple, Amazon. So that's one thing that the markets are watching very closely. Your Nasdaq also 1% up. The Fed meet, of course, and then jobs data later on. And if it's not too hot and not too cold, just like Goldilocks' porridge, then the markets will be happy. So that commentary, tech results, job data, all key to a sustained bull run. You saw that playing out on the 10-year as well. The 10-year dipping comfortably under 4.1, so 4.08% is where it landed. Softer there. Just a quick word on crude. That seesaw and uncertainty continues. Early morning our time, Biden made a comment that he will retaliate for the death of 3 American soldiers in a drone strike. That fear that this will expand into a war in Iran continues. On the other hand, the Evergrande debacle in China is also raising concerns about what happens to the economy there. Though, let's just pull up Asia. Asia is largely okay. Or was when I saw it last. Clearly not now. The Hang Seng down nearly 2%. So Evergrande seems to be the big concern.
Okay. China is separate. Hong Kong markets were separate because of this, but everything else in Asia is looking spick and span.
Exactly. So, and that's the thing about Evergrande, Niraj. The debate there is whether it will be contained. It's not a 2008 kind of a crisis. It's, yes, the largest real estate company in China, which has gone bust. Yeah. But the fears of contagion are not as much.
Yes, but the only point is I think the markets have learned to live with a China underperformance in 2023. Yes, a contagion effect of... I think Chinese property is now being viewed as a contained domestic event as opposed to it having global ramifications. And I think we've seen 2 or 3 instances since the start of 2023 when such things have happened. Yes, this is liquidation for Evergrande, but before that as well, we've seen enough news around that. So the common belief is that Chinese issues may not hurt. And the fact remains, frankly, that I think if you look at the Nomina note this morning, for example, and if you look at the Goldman Sachs Hong Kong macro conference last week, people are actually making a turn towards China. The ETF flows suggested that as well, that there's a bit of value that is being found there. And therefore, you've got to argue that I think the news is
all in the price
right now there, but the market is discounted 6 months out. People are buying into the valuations there.
Okay. In fact, I think while that might be a good talking point, the other bigger concern, and I think Jeffries has also pointed this out, is the geopolitical tension.
Yeah.
You know, we are ignoring it for now. It seems like we're taking it in our stride. But the fact remains, if anything's got to blow out, that could be the big negative that could take all of us down, including global equity markets.
Just to add to that, you're going into an election phase in the US. Biden has got his back to his wall, and that's when presidents tend to get a bit trigger happy.
I mean, he is going down as the worst president in the history of the United States. I
Will
mean,
a
Americans
war,
not very happy
will
with...
a geopolitical configuration save him, is the question. But focus on what's happening over here. What a close yesterday in the Indian markets. Will that continue?
You would argue some bit of it could be led to, attributed to short covering, to be very honest, because the flows were hardly anything to talk about.
No Nitish factor, because we debated this yesterday. Niraj, you want to convince, but maybe Nitish's Nifty impact was seen after all.
Maybe that, but I still, I mean, one of the factors could be very well that, or Nitish, plus the fact that maybe market betting a lot more on the policy continuity, simply because Nitish is one cog in the wheel in the opposition alliance, which has come off, but there are others too which have done that. So maybe policy continuity out there and getting more cemented. But as you said, Tamanna, yesterday, how much can you discount an already discounted news? That's a key factor. But yeah, the trade setup, I mean, fresh leg up, one, because of the global market uptick, and two, oil upstream doing well. You hit the nail on the head. Oil remains that big volatile because oil is a deep insider of what happens to geopolitics, and for now it's well behaved. But yesterday an uptick there, and we've seen oil stocks, oil upstream leading the market rally yesterday. So that's part one. But the interesting piece was, and something that one of our guests marked on the closing show yesterday as well, that volatility was very high yesterday. And by the way, VIX is not just high in India. If you look at volatility across other asset classes, including currencies, it's really perked up. Now, is it because of Fed speak coming up in 2 days? Maybe so. But VIX was very high yesterday, including our VIX, 13.5% higher, or 13% uptick. The thing about stocks, aside of upstream oil, and by the way, we spoke about this on Editor's Cut on 24th Jan about what's next for oil after the correction and the valuations that are set up there. So kind of preempted some bit of this. But what the market seems to be suggesting is that the space to look at, guys, is power. Every single dip in the last 3 months, the one pocket that has gotten bought into is power. People talk about how valuations at PFC, REC are stretched and how they are higher, and the stocks correct, and the next day when the market moves up, these stocks inch up higher. But yesterday we didn't just see PFC, REC. So across the board, a clutch of these things doing well. So watch out for power as a pocket. And dealing rooms that I spoke to post-market hours yesterday, 3 pockets stand out. Shipping. It's a small bucket, but watch out for shipping results. Watch out for engineering companies because of the kind of contracts that they're bagging. And yesterday we saw one more recent IPO bagging a contract with Rolls-Royce, for example. So that's the other pocket to watch out for. And of course, oil upstream, by virtue of the move that they've made, it's probably not just a one-trick pony or a one-stop wonder. Maybe there is more in store. So I think this is 2 or 3 pockets that people definitely need to watch out for.
You know, Niraj, while you're talking about how upstream is going to be in a sweet spot on back of higher crude prices, while it aids that part of the market, the larger part of the market is not going to be very pleased with higher crude prices. So while we're looking at the glass as half full right now, the fact remains that this is good, and this will be the jack in the pack for our markets as well. Indian markets are uncomfortable when crude trades above levels of $80 a barrel, and that's pretty much where we will be trading at, or have been trading at in the last couple of days of trade. So that's one thing you want to keep in mind. The dollar is something else that could play havoc for Indian equity markets, but all eyes, remember, will remain on the FOMC meeting that's lined up for later this week, along with the interim budget. You've also got auto sales. So lots of other factors that will be critical for our markets. We'll discuss that in more detail on Editor's Cut, but very quickly to take you through a few stocks, and it's all about earnings. It's all about how these stocks are going to be reacting. We'll take you through the larger ones that reported numbers. Bajaj Finance came out with earnings. Earnings largely in line with what the street was expecting. Brokerages, to remember, don't seem very pleased with what they've seen. seen. NIMs have fallen 11 basis points quarter on quarter due to higher cost of funding. This has also prompted Bajaj Finance to raise lending rates. Management, remember, has guided for cost of funds to go up to 1.75 to 1.8%, and that's what your credit cost will be at, slightly higher than what was initially anticipated at 1.55 to 1.65% earlier. 3 new CEOs have been appointed. The MD has reiterated that he will be part of the strategic shift that Bajaj Finance is currently going through. Remember, this has been a key overhang for Bajaj Finance in the last couple of months. So this could be viewed as a positive. Earnings, though, largely in line. Fact remains, brokerages still not very pleased with what they've seen with regard to Bajaj Finance's earnings. Apart from that, let's take you through ITC. Again, it's been a muted quarter for ITC. They did record a 10.75% year-on-year growth in standalone net profit despite weak operating numbers. The profitability is improved due to higher income and lower tax outgo. That is not where the operation efficiency has kicked in. This is largely out of balance sheet items that have aided ITC's earnings this quarter. Markets, of course, will see through that and will want to know how business is really doing. 3% decline in EBITDA was seen in the third quarter. This is the very first time ITC has seen a decline in EBITDA in the last 12 quarters. Decline was led by cigarettes, FMCG and paperboard business. Brokerages believe that cigarette volumes are key to be watched. They've actually declined in relation to estimates that have been put out. Revenues have grown marginally for the cigarette business by about 2.3% year on year. FMCG business grew below expectations on tough macro conditions. Agri revenues have also declined due to export restrictions for agri products. The only business that actually grew for ITC in this quarter was hospitality. Remember, tourism has been the very important talking point for the country, and ITC gaining on back of that. Delisting of ITC, or listing rather, of the hotel business is expected before the end of 2024 calendar year. Quick mention on Godfrey Phillips, the cigarette and tobacco product maker, recorded a consolidated net profit of 212 crores, up about 6% odd. Strong growth in top line. Revenues also look pretty good. Operating margin was slightly lower. The stock could be in focus and could see some buying in today's day of trade. A quick mention before we continue with earnings is PNB. They've also last evening at the meeting announced that they are looking to raise 7,500 crores through QIP or an FPO during this financial year. So 2024 to 2025, the year is when they would be looking to raise a substantial amount of capital to the tune of 7,500 crores. So it's back to earnings. I believe Marico as well on the radar this morning, Tamanna.
Absolutely. Just on the cigarette makers, ITC and Godfrey Phillips, remember, always a bit of pressure before any kind of a budget, vote on account, interim or full-fledged, because always the headwind of a tax increase that might come in. So that is one. But yes, Marico also showing a trend of softness, I would say. So the numbers have seen volume growths at 2%. That's the slowest pace this fiscal. It's the third straight quarter of single-digit volume growth for Marico, and rural demand remains a concern. So you're seeing that common theme in some of that FMCG pack and consumer pack. Just on the numbers, the EBITDA was up 12%. A little shy of Bloomberg estimates. Margins were up about 271 bips, so slightly better than expected. And net profits were also up slightly better than expected. Just quickly taking you through a couple of notes on Marico. Citi has maintained a buy but has reduced its target price to 585 from 610 earlier. Jefferies, meanwhile, has retained a buy and reduced its target price to 650 from 660 earlier. So you might see some pressure over there. Vodafone is the other one, and yes, there have been losses in this company, but losses have actually narrowed to 6,986, while margins have expanded. Along with the numbers, the quarterly numbers, you had a TRAI data, monthly data on subscribers, and as usual, Vodafone is losing subscribers, but the rate at which they're losing subscribers has halved. Their margins actually not bad at 40.76% for Vodafone, up about 79 bips. And overall, the telecom pack also one to look at. There's a Jefferies note today on India Telecom Services, and the numbers were out yesterday. Bharti Airtel's numbers were fabulous, up 5x. for the month. Jio was up 9%. And total additions were at 31.83 lakhs. So you've got good telecom numbers. Jeffrey says that Jio's continued lead on active subscriber bodes well for the sector's pricing outlook, and strong 3G, 4G subscriber additions have been seen. Bharti's 20 bips market share also augurs well for ARPU outlook, and that's important really for the telecom space and listed players there. Just, I think, a couple of more actually on my radar, but before I hand it to Niraj, I'll just maybe talk about Piramal Enterprises, because that's a really distressing set of numbers. Revenues down 83%, net losses at 1,059 crores versus a profit of 2,892 crores last time. There's a one-time hit, and that's what's hurting on AIF provisions. So you've seen in the whole financial space, a lot of AIF provisions after the RBI circular. The hit for Piramal Enterprises is a fairly big one. Gross NPAs are okay, pretty much the same, 2.4% versus 2.74%. Q on Q. Citi says that they maintain a sell on Piramal Enterprises and have reduced the target price to 850 from 880 earlier. The provision towards AIF has dented earnings. That's the big concern, though the management is confident of recovery. A lot more on the list today, Niraj, though.
It's a very long list, so not surprising there, because it's earnings season, peak of earnings season. While power is largely done well, I think NTPC left a bit to be desired, if you will, on the reported numbers. Revenues were down, EBITDA was down about 21%. Operating margins dipped quite a bit as well, and I think that set of headline numbers leave a bit to be desired for NTPC. So let's wait and watch if there is a bit of a move there. On the flip side, a small company, actually not so small, because Jayaprakash Power Ventures, deceptively, it's just that out of the blue, I just managed to look at the market cap. It's about 11,500 crores, so it's not necessarily small, but they come out with a fabulous set of numbers. The consolidated revenues at 2,190 crores versus 1,201 crores, up about 82%. EBITDA, massive uptake. Margins, therefore, no point looking at, because, the corresponding margins were so low that a number of 8, 12, 21, whatever would have been good, but they've come in at 26.35 versus 0.8%. So operational metrics very strong, as a result of which a bottom line number versus a loss in the corresponding quarter last year. The stock preempted this, was up about 5% yesterday, has had a good move otherwise as well. So watch out for JP Power Ventures, could be an interesting one. Some stocks in news. Samina spoke about PNB, and typically a bank or an NBFC raising money is great news. 7,500 crores would essentially mean good for PNB. But there is also Krishna Diagnostics, which has bagged a contract from Maharashtra to provide MRI scan and CT scan services in 17 districts. So after Rajasthan and a presence there, Maharashtra opens up for Krishna. So watch out for this one. And watch out for Suntec Realty. It'll develop projects with a gross development value of 3,000 crores in Nepean Sea Road and Bandra. Now, it's anyways a very dominant player in the MMR region, but the point being now it's getting into the real upper end. It's always been in this luxury premium category, but this seems to be beating that past as well. Watch out for Suntec. A lot of very smart fund managers are constructive on Suntec, as they are on many other real estate names, but this should probably augur well. Just one last piece, and we'll talk about some brokerage notes as well very quickly, but one last piece. I thought AMC stocks left a bit to be desired and mixed reportage. So while Nippon was shining out well, look at UTI AMC, weak AUM growth and decline in yields, and PBT down 7%. And Aditya Birla Sun Life AMC saw weakness in fresh flows. The gross SIP flow share declined to 5.7% versus 6.9% in December 2022, and higher cost to income ratio dragged the core earnings as well. So watch out for the AMC stocks, could have a bit of a dull day. Anything else that stands out, guys?
Very quickly, I don't know if you've mentioned the FI numbers, but those...
Yeah, we mentioned at the start.
Not very significant, but definitely, I don't know what's turning tides. But also one more quick mention, you've got a new listing today, so EPAC Durable will be listing on the exchanges, so that's one more thing you want to watch out for in terms of
No,
trade.
I just wanted to add a couple of things. One is Sunteck Reality. When you say Bandra, you have to mention is Bandra Bandstand. So neighborhood of Salman and Shah Rukh. That's why it's the big league. And Samina as well. But Venus Pipes is just one more which I wanted to talk about. What a solid set of numbers. So just want to put that on your radar. Revenue up 52%, EBITDA up 122, nearly 123%. A solid export book as well. It's one of their best ever quarters on EBITDA, operating margins, and profits up 106% as well. So Venus Pipe, anyway, solid company. One definitely that you should keep on your watch list.
Most certainly. And before I toss over to Alex, watch out for Interglobe Aviation. Citi has an interesting note. A buy with the target price raised to 3,400 versus 2,900. So we'll be watching out for that as well. Watch out for all of these. Watch out for ONGC, Oil India. Watch out for Adani Enterprises, Adani Ports. I think a clutch of those names have done well. And we'll kind of talk about that, won't we, Alex, today on the editor's cut? Because yesterday's move, as institutional flows haven't explained quite why, but we'll try and dissect what could have happened and what could be the way ahead.
Certainly. I'm actually curious about, and some of that has already been spoken about, Niraj. By the way, if you're tuning in for the first time, this is Editor's Cut, where we try and go beyond just the headlines to give you some perspective on actionable insight that you can take. Now, let's talk about yesterday's move, 1.8% on the benchmark, but a few of the names, Niraj, you don't see moves like that. The last time you saw a move like that on Reliance Industries was post-COVID, and I guess a lot of people would write that off as a one-off. It doesn't happen every, in fact, it was a one-off. And so therefore, the question is, why did that happen? The question is, does that continue going forward? What are the factors that could lead to that? One, of course, is the budget, but there's a lot that's playing globally. I was looking at a headline, Neeraj, $10 trillion worth of market capitalization. Companies representing that are posting numbers between today and Thursday. You have the Fed meeting outcome. You have things playing out in China as well. So first, let's talk about what played out in markets yesterday, Niraj.
So I mean, kind of well discovered, if you will, and we'll talk about the local factors too. But if you permit me, Alex, can I just start off with the global factors?
Yes, of course.
And then move on to the local factors,
yes.
Right? Samina, I think, has some perspective there too. But here's the deal. I mean, we've rallied a bit. Now, is the market trying to preempt what the Fed could say and do? Simply because if you frankly look at it, global markets are standing on a bit of an edge, cliff's edge, if indeed the rate cut assumptions for March get thwarted by Joe Biden and company come tomorrow night. Because the SPX has really rallied, and most notes and most smart people that we've spoken to are all talking about the possibility of a sharp pullback, not necessarily a prolonged one, but a sharp pullback if indeed the rate cut assumptions don't stay true for March.
Sure.
Now, whether something like that comes about tomorrow or no remains to be seen. The revision of the rate cut expectations from 135 basis points downtick to a 70 basis points downtick as well could be a factor. And, you know, frankly, for most CEOs that we spoke to, whether in Davos or otherwise, and the NDTV network, I mean, we spoke to collectively maybe about 15 large global CEOs. Everybody seems to believe that growth assumptions are back-ended. So we don't necessarily see very healthy growth in the global economy for the first half. So all of that put together, Wednesday becomes as important for global markets as Thursday could be for
Indian
India.
Markets.
In fact, if I take a cue from what you said, Niraj, if we don't get the rate cut commentary in that sense from the FOMC tomorrow, you will see the 10-year rally up. If that does happen, debt markets in the US become far more attractive for an investor or a fund to put money out there to create alpha for emerging markets, right? So it's not just for global markets, it's also very, very important for what happens to Indian equity markets. To take a cue from what you said, chances of a rate cut only seem to be getting delayed. You've got Red Sea crisis, you've got crude that is staring at us in the face. So while that becomes important for Indian equity markets, India Inc., it's equally important for a central bank setting outside this country in the US who's watching crude to determine what the rate action is going to be. So that's the other factor, I think, that will be important. So while budget is important for us, in more ways than one, the FOMC becomes equally important for our markets
and
as
I don't think we've spoken necessarily enough about this Red Sea issue, which seems to be getting worse. That, I guess, is the joker in the pack, and you can't really talk about what could happen either way, right? But let's focus on what we could potentially do. And I think to a certain extent, Neeraj, and coming back, if you'll permit me, to the domestic factor, factors.
Just before that, a quick mention on China. I know we've been talking about financial crisis in China, but you had three brokerages, Societe Generale, UBS and Jefferies. So Societe Generale, UBS and Jefferies have all said at this stage that China looks far more attractive than India. It may not be a strategic investment opportunity for investors, but it's definitely a tactical bet. More importantly, China trades at India trades at a 157% premium to Chinese markets. So if you look at what's happening there, investors sitting outside, and of course I'm not talking about local investors, and we've seen that in FI flows, right? Money is slowing down into India. Now, whether those flows are getting ebbed and are being kept aside to go out and buy Chinese markets is anybody's guess. But this is a factor we've talked about. This is a factor that could potentially play out. I mean, China trades at 2x while India trades at 21 times.
Certainly,
so
absolutely.
The valuation
no,
graph...
sorry, 8x.
8x, pardon me, 8x.
So, but having said that, I will also put a note of caution saying that the property market issue in China is not resolved. Just yesterday, you saw a big headline on Evergrande, and that crisis, I don't think, is going anywhere.
All of that could potentially be in the price. They've been cross underperformers, and we seem to be outperformers who also look expensive, and it's above our, historical
So then
averages.
let's very quickly talk about the domestic issues, right? Again, not very often that you see big moves.
Did you say issues?
Not issues.
Positives.
No, I shouldn't say
events.
domestic issues. Domestic factors, if I can call it that. So are there legs in the rally? That's what everyone wants to know, Niraj.
See, so, I mean, all of us could weigh in on this, but very quickly, we have about a minute and a half before we end this. So, upstream oil yesterday was the key reason, and the fact that HDFC Bank did not participate on the downside. So that's a big positive too.
Thanks to LIC.
You could argue, yes. But, I mean, a small uptick, short covering led, but upstream oil effectively, right? Months and months of underperformance for a Reliance to make its biggest intraday gain after 20 months or something like that. Right? It's just crazy. So, therefore, it's a bit of a catch-up rally that Reliance, ONGC, etc. are all doing. So that is one. The telecom additions, etc., all provide a further leg on Reliance Industries, because you have to admit that it's the big boy that does that. And last but not the least, we saw yesterday PSU oil upstream do well. So that is a big sentiment booster because the PSU sentiment continues. We saw the Adani Group do well. Yes, Adani Enterprises on the back of a report from Cantor Fitzgerald, but there was Adani Ports, which had a 4% leg up. Adani Green numbers didn't look all that bad. And if you just look at the sentiment, Adani Power numbers were fabulous. So, and that is a big sentiment booster. We know what happened in January last year, right? When this issue hit these stocks and people thought about it's an isolated issue, but it hit the sentiment across. And therefore, this sentiment pickup as well aids. And 2 names on the index, 2 names on the other, or 3 names on the other indices. I think it plays a part. So lots of factors there.
Would you say also, for example, and we have a little more time because we're heading into an important interview as well, but would you say that the budget, of course, it's an interim budget and it's been said, there may not be any big bang announcements for this time, but it allows the government to talk about what the roadmap is going forward.
I'm going to just quickly mention what Tamanna actually mentioned to me just a few minutes ago. She said the same vote of account or interim budget in 2019 actually laid out the groundwork and the map.
That was my point.
And come July, we saw Nirmala Sitharaman following course of what was said. So while this could be a vote of account, fact remains that it could still be critical, A, and B, policy continuity. I think that's a given after what we saw on the weekend in Bihar. So I think anything that reiterates, like Niraj and Tamanna both mentioned, that you're discounting already discounted news in the market. There is going to be no breaks on policy continuity from the look of it. So all those are positives, Alex, but the fact also remains earnings this season are a 50-50 split. I don't think earnings have been as good as market participants would have liked. So we have to also accept, while the macros are working in our favor, some of those earnings have been disappointing. Rural demand is not picking up.
Financials have not been...
A company like ITC that reported today, first time sees a decline in 12 quarters.
No, but largely...
last time we saw things
Samina,
like
sorry, I mean, the reason why I beg to differ slightly is that, for example, I was reading Rhythm's note this morning, and relative, the broad universe numbers, relative to estimates, are actually beating. Motilal Oswal also said the same thing. Yes, but
look at your consumption names.
So banks'
the growth is coming from smaller companies like a Shakti Pumps, for example, or a Zen Technologies, right? Smaller market cap, but the frontline names.
There is a factor.
So IT names have not. No, IT names haven't been bad on the large.
We can argue that on a separate conversation.
But I'm just saying that the reportage. So based on the notes that are coming on from the brokerages, relative to what was estimated, the numbers are actually turning out to be a beat in Q3 as well. And we will clock in double-digit earnings growth 4th year in a row.
But
there are pockets of underperformance. In fact, I did want to talk about Bajaj Finance because while there is a growth of 23% on the bottom line, you have credit cost that has gone up because your gross non-performing assets have gone from 0.9% in the previous quarter to 1.18%.
And brokerages are not happy with what they've seen from Bajaj Finance.
Look, I take your point. There are several companies and large ones at that have come in ahead of estimates, but I think there are a few pockets, strategic pockets that have not fired.
Well, we'll decide if you're a sell side or a buy side brokerage that is calling the shots here.
All right. So I guess to a certain extent the jury is out, but some of the perspective that you've got hopefully has benefited you and given you some clarity of what to expect. Neeraj is a perma bull,
no, I'm a sucker for statistics, and the statistics seems to suggest that for now the numbers. Which is why the sucker for statistics would say that the valuations don't seem too compelling, but the numbers are following.
Fantastic. So on that note, we have to head into a break. But before we head into that break, there's an interview that my colleague Vikas Srivastav did with Anil Sardana, the Managing Director at Adani Energy Solutions, on the back of a steady Q3. Listen in.
The company's operations and the results thereof are actually a culmination of the transmission business and the distribution business. And in both the businesses, we continue to have a very good glide path for growth, as also very strong pipeline in hand. The distribution business continues to be one of the benchmark ones in India. So much so, last quarter saw us deliver our AT&C losses at 5.46%. So all in all, the growth continues to be great. In fact, while we registered 19% revenue growth, we also registered 10% EBITDA growth. It's basically for the reason that right now we haven't provided for some of the extra numbers and kept a provision till such time that we get a regulatory pronouncement for some of the delays that happened because of the COVID period. All in all, the performance in both the segments has been fabulous. There is a third segment called smart meters, where at this stage, we've been highly successful in terms of orders that we have been able to get. We have in fact captured almost 22% market share amongst 10 participating players. And this will start rolling out in the next 30 to 36 months. And you will find that this will also start contributing to the overall numbers of Adani Energy Solutions Limited.
Right. I will come to smart metering a bit later. But we also come to know that you have plans for becoming an integrated player. The way we are seeing that you are into distribution, you are into transmission, you also are there now into smart metering. So is there any plan for energy storage business, battery storage business that you are planning to look at? And what are the challenges going ahead in that?
Sure. Battery storage as a business has different connotation. Battery storage is used also in electric vehicles. Battery storage is also used at the consumer interface level. Our interest will be to provide battery storage at distribution company level and at the grid level. And we will certainly partake in both of these because this is part and parcel of the business that we do today. So storage battery will be one of the parts of it. And when you alluded to us being integrated, we are integrated in terms of solutioning. As you would have noticed, we changed our name about a year back and called it as Adani Energy Solutions Limited. As the name suggests, we are focusing on end-to-end solutions for customers. So whether it is solutions for large customers in terms of sourcing green electrons on a round-the-clock basis, or a reliability phenomena that they want on guaranteed basis, or something which relates to power quality for specialized electronic units which do not want to spend paraphernalia on large DG sets or on providing uninterrupted power supply modules. We will provide end-to-end solution on guarantee basis to large customers. So that is what our integration phenomena will show. So learning from our ground level interface of being a distribution player, as also the one who is formidable in smart meters, we are integrating energy solutions for customers on round-the-clock basis as a part of this solutioning concept. That's the USP of Adani Energy Solutions.
Welcome back. You're watching India Market Open. Quick look at the implied open tells you that we're set for another good day, at least initially, the likes of it seem will open about 96 points up. Kunal Rambia, founder of The Street, with us on the show. Neerav Asher, head equity research analyst at Latin Manharlal, also joining us. Very good morning, Kunal and Neerav. Great to have you on the show. Kunal, let me begin with you. And let's start with your levels on the Nifty and the Bank Nifty.
Very good morning to everyone and to all our viewers. So if you look at the Nifty, then obviously we saw a decisive, the uptrend yesterday. But if you look at the overall broader formation of last 28 to 30 days, it's been more or less sideways consolidation. So on the Nifty, I think 21,800 to 850 kind of level seems to be a good resistance level for time being. And on the support side, I think Nifty has a support at around 21,600 levels. So until these two levels are taken out, I think this broader consolidation range might just continue. And as a trader, will have to just watch out for the breakout either on the upside or on the lower side and take the trade accordingly.
Kunal, just let's quickly also get your top calls for the day.
So if you look at the formations, I think the HDFC Bank is looking now attractive. Only reason being it's been in the sideways consolidation after the correction. So at 1456, one can think of initiating a buy on this. The first trigger point, though, is at around 1465. Above that, I think the targets can be placed as high as 1520. And the stop loss for this call can be around 1440. And the second is ICICI Bank. Again, I'm just taking both the counters from the banking segment because of good formations. So the second is ICICI Bank with the stop loss of 1010. I think one can initiate a buy on that also, and the first target can be 1050 followed by 1065.
Before we talk about the markets as whole, what's the verdict on Reliance Industries? 7% up move yesterday. It's finally broken a trading range after 2 years. What factors do you think led to the run-up yesterday, Neerav?
Good morning and thank you for having me on your show. I think Reliance, this kind of a move is something which is very, very rare. We've seen this move after a long time. But I think this, if one were to look at the results, the quarterly results of Reliance, they were not so great. The consumer businesses have been doing all the heavy lifting as far as the results are concerned. The upstream oil and gas business has been picking up quite well. The downstream business faces a lot of pressures on account of dumping related issues, subdued demand, etc. But I think yesterday's move indicates there's some sort of value unlocking is expected by the market as a part of the family settlement of the assets. And I think we could see value unlocking in all of the businesses. All of these are very, very distinct businesses. They have a very, very different margin trajectory. If one were to look at the Geo business, then I think the telecom business has very strong margins. The oil and gas business, which has fully matured with the MJ fields doing quite well, I think the margin trajectory is of a very, very high level. The margins over there are more than 85%. And of course, we have the retail business, which has got very, very strong volume growth, despite the fact that the margins are on the lower side. So I think value unlocking definitely is on the cards, and I think we expect much more upside from the current levels.
Can I ask you, so what if the value, because one is the hope of an event happening, good morning of course, and the other one is the event actually happening. So if that were not to happen, or if that gets delayed, or if it doesn't happen in the next announcements in the next 1 month, could this rally get wound up again? Because yesterday it was not just Reliance, oil upstream at large had a really strong move.
To my mind, I think this rally may not fizzle out as far as Reliance is concerned, and I think we have a combination of various factors. We have the budget, the interim budget, which is expected. And there are very high expectations in terms of infra spend by the government. And if one were to look at the government's capex spend during the period from April to November, that has gone up by 31% on a year-on-year basis. So I think the chips are quite optimistic, and if one were to read the commentary of the different companies, then I think the infra spending has been very, very strong in the economy. And if one were to take into account the commentary of the various steel companies or the cement companies, then the demand too has been picking up. So this indicates in many ways that the infrastructure demand is picking up in a very, very big way. The economy is picking up. So I think the rally may not fizzle out as far as all these frontline stocks are concerned.
How do you feel about Reliance Industries at this level after a 7% move yesterday? Do you feel like there's a breakout on the charts? And also, extend that conversation to the other oil and gas stocks. Anything else that you like? Maybe even a downstream like a BPCL or an HPCL that did see a sharp move yesterday. Kunal?
Right. So if you look at the Reliance, yesterday we saw a fresh breakout and that was at around 2,800, and since then the counter went up by almost 100 points. And if you look at the intraday chart, there was not even a single higher top, higher bottom. It was a linear rally followed by a sideways consolidation. So as you know, the other person also spoke, I think the sideways consolidation with positive biasness may just continue. But as a trader, I will not really be comfortable buying this counter at the peak level. Rather, I'll look at BPCL. I think the breakout came yesterday, but it fizzled out again. 490 is a level to watch out as a support on BPCL. If these 490 is taken care of, I think the targets can be 525 to 530 in the midterm. One can think of accumulating Reliance on decline rather than buying at the escalated level of this 2,900 some kind of levels.
Okay. Now trying to think of what else moved yesterday. So one was oil upstream, which had a fabulous move. The other was the set of moves in the Adani Group stocks as well. Enterprises was up 5% yesterday. Power was up 5%. Green did about 3%. Ports was up about 4%, so that bucket has done very well. Just a technical and a fundamental view. Kunal, I'll come to you first on the charts. Good morning and good having you. Any thoughts on which of these looks the strongest out of the pack?
Good morning, Niraj. So if you look at Adani Port, I think this counter is looking very attractive. Reason being on the technical front, we give a lot of importance to the formations. So there is a flag formation on the chart. On 23rd of Jan, I think we saw the high of around 1,207. Yesterday, this counter has still closed near to 1,200. So the breakout remains at 1,207 and above. I think about 1,210, one can initiate a buy on the same with the stop loss of 1,190. And the targets can be as high as 1,350 to 1,400 kind of levels.
So 1207 is what Kunal is saying on ports. It is his favorite from amongst the pack. Now, Nirav, how closely do you guys track either ACC Ambuja or Adani Enterprises or ports or some of the others? Because there was one thing of a note yesterday from a global brokerage which got the excitement in Adani Enterprises. But that was not all. Results from port, green, etc. were okay. And we saw what happened to ACC and Ambuja because of ACC earnings as well. So how do you look at stocks within this group?
So as far as the Adani Group's stocks are concerned, I think we have maintained earlier also that we like the group companies where there are strong cash flows and visibility with respect to the earnings. So in order, we like Adani Ports and SEZ, we like Adani Enterprises, and we like Adani Power. Adani Ports and SEZ, we all know that it's a cash cow as far as the group is concerned. As far as Adani Enterprises is concerned, yesterday's note also highlights the importance of the airports business. It points out that the airports business is the business to watch out for in the next 1 decade. And I think Adani Enterprises has got exposure over there. And of course, in the power business, the scale up has been quite strong. So I think we'll begin to see the cash flows coming in the near future. So I think we like these three businesses as far as the Adani Group is concerned. And of course, coming back to ACC, I think a very, very strong set of numbers. And this is across the board. If one were to look at the cement companies, I think the cost pressures have eased. We had the pressure of 1,800 rupees per ton power and fuel cost. And this has come down substantially. For the entire industry, I think the power and fuel cost has come down to the extent of 16 to 18%. So this has directly resulted in operating leverage, and it has resulted in companies reporting much better set of net profit as compared to the previous quarters. Although the volume growth is beginning to pick up, most of the industry players have been indicating that demand has started picking up from mid-December. So I think overall for the cement industry, the outlook looks very, very good. And of course, ACC is going to benefit from these factors as well as the group synergies.
Standard disclaimer, of course, the Adani Group owns NDTV and you're watching NDTV Profit. But good moves out there, and that's the set of names which have actually done really well yesterday. Glad we've covered all of them.
Fire in yesterday's day of trade. A quick word again, Nirav, talking about value investing, and I'm going to use the word value because I'm suddenly talking about HDFC Bank. Do you feel like the sell-off is now done? Are you seeing value in HDFC Bank at this stage? Maybe bottoming out for now and could be a good price to get into?
Yes, one can start buying into HDFC Bank, but it will be with a horizon. So it will be a slow burn. In this type of a market where people are chasing returns on a day-to-day basis, I think it will require a lot of patience as far as HDFC Bank is concerned. So I think the kind of moves which we have seen in the recent past, I think one will have to wait patiently, hold the stock patiently for the returns to start trickling.
Very quickly, Kunal, your take on HDFC Bank, 1456. How does the stock look at these levels? Would you buy?
So, what I've done is I have actually evaluated the chart on the weekly basis, and that's from 2009 data. So I'm just referring to a couple of dates, 2009 bottom, and then we had the extreme bottom somewhere in 2020. If I connect these two bottoms on the technical chart, it's giving me a perfect support right near to 1400 levels. Counter made a bottom at around 1387 or so, and it has bounced from that. So as far as the trend is concerned, it's 100% intact. If you look at last 3 to 4 months data, again, it's been sideways consolidation near to extreme low itself. So this is a counter which we have shortlisted for buying, the only reason being favorable risk-reward ratio. So as what mentioned just now, I think one needs to have patience, but this is a good level to initiate a buy. Stop loss will be 1387, which is the extremely mid bottom. And the targets can be on the higher end of the range. That's around 1600 to 1625.
All right, let's go now to my colleague Sesa. So we're tracking numbers, and a large set of numbers came in after markets closed yesterday. Let's talk about ITC first. A clutch of brokerage reports on it as well. So the net profit increased up to 11% on a year-on-year basis. Results beat street estimates as well, but there doesn't seem to be too much enthusiasm on growth in some quarters, including cigarettes. Sesha is joining us for more.
Right. So if we look at the ITC's profitability, a sharp 30% rise in other income and a 30% lower tax expense is what has led to a significant beat, despite a miss on the EBITDA front, which declined 3% year on year. Now, revenues grew 1.6%. Now, this was again due to the lower than expected cigarette volumes and weak paperboard and the agri businesses. Margins too fell 180 basis points to 36.5%, again missing estimates there. Now, ITC's mainstay cigarette business is seeing consolidation after multiple quarters of double-digit growth. Cigarette volumes is estimated to have declined 2% on a high base. FMCG other business, except cigarettes, grew 8%. Now, this is amidst the industry-wide slowdown in the consumer demand. The hotel business, however, recorded a stellar performance. This was despite a high base, and this was driven by factors like higher revenue per available room and higher occupancies across properties, driven by business travel, as well as events like the ICC Cricket World Cup. Two segments, that is the agri and the paperboard, were the laggards. Agri declined 2.2% due to the export ban on wheat and rice, and paper segment revenue declined 9.7%. So going forward, agri commodity inflation would be a key monitorable. Apart from that, any taxation or adverse regulatory pronouncements by the government in the pre-election budget would also is something to be watched out for.
Absolutely. So taxes on cigarettes are to be expected, but that's now factored in and happens every year, I suppose. Kunal, any view on ITC? And I would just add some of the others in the space. Marico also had their numbers out. Godfrey Phillips, any of these you track? And first, let's start with the ITC view.
So on the ITC front, we saw the first breakout somewhere in the month of May 2023, where the counter managed to cross 430 mark and went up to as high as 497. It was just a flick and then immediately it rebounded to 435. So since then, this counter is moving in a particular zone. Now the support is at 435 and the resistance is at around 480. So I would not really be keen to buy at this present levels. I'll wait for the counter to come near to 435 if at all it manages to reach near those levels, with the stop loss of 430 on the closing basis. One can initiate a buy, and the targets can be 480. I think this range-bound movement might just continue before we see a new rally coming on the charts.
Yeah. Nirav, view on ITC and the pack, the entire sort of FMCG pack, the rural demand drag continues to be very evident in the commentary coming in. But do you see that turning around? Even the commentary from Marico, etc., has been that in the next 4 quarters, you see some of those problems easing.
Coming to ITC, I think we felt that the numbers lacked punch. So I think it's better to stay away from the counter, at least for the time being. Starting off with other FMCG players, we had HUL, which gave their commentary. They said they're very cautiously optimistic about the future. Just 2% volume growth, so that has been a cause of great disappointment. As far as Marico is concerned, they've done reasonably well, but I think overall the FMCG sector continues to struggle with a whole host of issues like poor volume growth, dualism as far as the market is concerned. We also have the emergence of small and regional players who had vacated space during the peak of the inflation or at the COVID time. Now they have researched in the market, and that is again becoming a pain point as far as FMCG companies are concerned. All this essentially means that they have to spend quite a lot on advertising and promotion, which is having an impact on their margins as well. So I think FMCGs continue to struggle, except those players who have an exposure solely to the urban markets or are focused on premiumization.
Right, apart from ITC and NTPC, a slew of other companies have also reported their third quarter earnings. Mahima is joining us with a list of those. Mahima?
Right. So the first one is Piramal Enterprises, where Piramal Enterprises suffered a loss of approximately 2,300 crores, and this was only because of a one-off provisioning for AIF investments. This also affected their asset under management. However, if we remove this one-off provision, the asset under management grew 6% quarter-on-quarter, 9% year-on-year. Then we had Heritage Foods, where the profit surged over 96% on strong dairy demand. The average selling price of milk rose by 5.2% year-on-year, boosting the company's revenue, and dairy is their biggest segment. So this is why the company's results have been very positive. Then we had Jayaprakash Power, where EBITDA has grown multiple times on account of low raw material prices, and net profit margins and revenues have significantly increased on account of higher realizations due to increase in tariff power prices. Then we had Venus Pipes, where it recorded its highest ever quarterly revenue, where volume of the seamless pipes increased by more than 100%, and volumes of their welded pipes witnessed a volume growth of more than 50%. Also, their exports in Q3 FY24 increased significantly to 35 crores versus that of only 1.4 crore in Q3 FY23. So these are some of the stocks that will be in focus today on the back of their Q3 earnings post-markets.
Thanks for that, Mahima. Of course, we'll discuss these stocks in more detail with our guest on the other side. We'll take a break. We're gearing up for pre-open trade. It looks like it's going to be another positive start. So stay with us. We'll be right back.
Strong start anticipated. The question is, can we build on from there, and what could lead it higher? The implied open was anyways higher, so about 114 odd points. Let's see what the pre-open rate suggests. You know, a clutch of names are in focus, and power is very, very strong. So, Nirav, it's not often that we speak about a Jaiprakash Power Ventures, but the numbers are rock solid. Now, I don't know if you look at this counter. If you do, what do you make of the numbers? If you don't, is there any other view on any other power financier, power ancillary that you have?
Of course, we don't look at this counter. We've not studied this counter. But as far as the overall power sector is concerned, I think a lot of supply side pressures have eased. We have seen the availability of coal, the domestic availability of coal, which has improved substantially. We have seen the imported price of coal, which has corrected substantially. If one were to read the fine print, I think it's come down substantially. The price of imported gas has also come down, and I think this is a very, very positive development as far as the power companies are concerned, and the demand continues to be very, very strong. So I think across the board, we are seeing power companies report very, very strong set of numbers, and this trend is likely to continue in the foreseeable future.
Okay. Some strong numbers there out there, but just before I get to a review on Bajaj Finance, just want to mark Jaiprakash Power Ventures, because I think just on the back of the numbers, that 11,000 crore market cap company, I repeat, I was caught by surprise when I saw the market cap today, but could have a good start today. Yes, looks like it'll have a good start. But what might have an indifferent start is Bajaj Finance. The big boy came out with Q3 numbers yesterday. My colleague Harsh Sehta joins in to dissect what are the key takeaways from the earnings, and he attended the con call as well, if there was something material in the call as well. Harsh, good morning.
Hi, good morning, Niraj. So yes, we've seen that Bajaj Finance gave very strong numbers from an operational perspective. The growth is extremely robust across the board. 35% growth is what the kind of number where the AUM grew by, which is quite solid given that the size of Bajaj Finance keeps increasing, right? And so that's one big positive. The customer franchise has gone up. It's now 8 crore plus in terms of customers, and they're looking to close the year at around 8.3 crore customers. So again, the growth over there also seems to be quite robust. Now let me talk about the numbers itself. Your NII largely has come in line overall, so that from a top line perspective does not seem to be a challenge. But where there has been a bit of a blip is where the provisioning is concerned. We've seen loan losses spike up a little bit. This is largely due to rural B2C, which has not been doing too well. Even in the past quarters, there has been guidance that there is some amount of pressure over there. They've calibrated growth is what the management has said. And therefore your provisioning has gone up, and that has had a knock-on effect on profit after tax. But largely what we are hearing from management is they have things under control. There are enough growth avenues. They are calibrating growth in rural B2C largely because of the stress that they are seeing, and they are not expecting a huge spike in credit costs. They guide for a 1.7 to 1.8 odd %, and they are expecting to meet that guidance. They are not saying that we'll cross that. So does not seem to be an issue which will be prolonged. They have things under control is what the management continues to reiterate. In terms of the overall picture, it's a mixed bag. Growth is quite strong, while there is some one-off stress that seems to be there in the book. But outside of that, the numbers look overall quite robust. Brokerages have also given it a thumbs up, and given the kind of underperformance we've seen from Bajaj Finance, I would say that a part of this is already priced in to some extent. Brokerages like Jefferies have given it a buy rating, reduced the target price from 9,470 to 9,400, but that's not material. 1 to 2% is the kind of EPS impact that they are calibrating for, given the kind of loan losses that we are seeing.
Yeah, you're seeing Bajaj Finance showing a bit of weakness in the pre-open session. At least quick views. Let's take a quick take from Nirav and Kunal on Bajaj Finance. I also want to pull up Piramal Enterprise and look at what's happening there. We were talking earlier and during the editor's cut as well on what the result season has been like, and especially for the BFSI space, it's been a tough knock, leading with HDFC. But Nirav, very quickly to you first, Bajaj Finance and Piramal Enterprise. What would you do at this point?
As far as Bajaj Finance is concerned, I think we would stay away from the counter for the time being because the results have been quite good, but there have been certain apprehensions about the asset quality, and at the same time, a lot of things are priced in as far as the valuations are concerned. And as far as Piramal Enterprises is concerned, I think we would stay away from the stock at this point of time.
Kunal?
See, if we first come to Bajaj Finance, then the observation is very simple that since May 2023, this counter is definitely in the positive territory itself. It's making a clear higher bottoms, but the tops are a little lower. So it's making a kind of consolidation formation. We look at the extreme bottom of May 2023, August 23, November 2023, and the recent one. I think the support is placed at around 7,000, which we saw just a couple of days back. Till the time the counter holds this 7,000 mark, there is no problem in accumulating near to those zones. With the stop loss of 6,950, one can certainly buy on dip, and I think this can be a good risk-reward ratio at the present level. As far as the PEL is concerned, again, the sideways consolidation continues with negative bias. There is a clear downtrend, and if you look at the historical data, somewhere in August 2023 there was a gap up open, July 2023 there was a gap up open, and that is offering the support as of now. So I think the support is placed at around 840. I think till the time that support is held on to, one can think of accumulating. Again, it's a positional call. For the trader, one will have to wait for the levels of around 925 to be taken out. Above 925, I think the counter may just gain the momentum. But for time being, it can be a good buying from the risk-reward point of view for the long term.
Right. Nirav, we didn't end up talking about banks beyond HDFC in our conversation. A quick word on PSU banks. They managed to do quite well in yesterday's trade. Is that a space you're optimistic on? Any sort of tactical calls here amongst the PSU banking majors?
Yeah, so as far as the PSU banks are concerned, we like a few banks which have performed reasonably well, relatively well as compared to the peers. I think Union Bank of India is something which warrants our attention. We like Bank of Baroda and we like PNB. And apart from that, I think we've been staying away largely from PSU banks.
Kunal, AU Small Finance Bank, it made a very good move yesterday. It was up about 12%. Rather, was down 12% in trade yesterday. Would this be a shorting candidate for you this morning?
See, again, it's reached near to the support level itself, which is 625. The closing was extremely negative. So, yes, we might see a follow-through selling coming today. But we'll have to see whether it holds the 620, 625 mark. Managing to hold, I think it can surprise on the upside. So, I will not really be keen to short at this level. I'll wait for the counter to give a bit of bounce till, say, at least around 645. And then I'll revisit to short for the short-term period.
Bajaj Finance... numbers, remember, were largely in line, but the street wasn't very excited. Brokerages like Citi have actually, raised their concerns or what they really think about Bajaj Finance going ahead. Credit cost has gone up, business uptake is not very strong, and the stock is getting beaten down in at least pre-open. So 3% cut on Bajaj. And if I can get ITC and Godfrey as well, and Marico while we are at it, ITC as well, for many, many quarters, margins have declined. Cigarette business is looking slightly weaker. Volumes, in fact, they don't put out those numbers there, but as per estimates, cigarette volumes have also seen a little bit of a decline. The stock not doing too badly, down about 0.6%. RIL, a quick check on that one before we move into talking to the another 1% on Reliance Industries is what we have. Adani Group stocks also will be in
this morning.
ONGC, if you can pull that one up too. Yeah. So your upstream continues to see some buying. Remember, Jeff, a couple of brokerages have indicated that the Red Sea crisis could be a boon coming in for upstream companies, and that could be explaining why you're seeing some of them doing quite well. In yesterday's day of trade, downstream as well rallied quite well. So your BPCL, HPCL, IOC also saw sharp gains. The whole pack as such was up and about. Kunal, as we get into market opening, very quickly, anything in the OMC pack that you would buy after looking at pre-open trade, very quick on what looks good at this stage for intraday?
So I think ONGC is well poised. The trend is really strong, and yesterday also we saw massive uptick. So I think this is a counter which I'll watch out for now. With the stop loss of around 250, one can initiate a buy, and the targets can be 265 in a day or two.
Let's quickly look at more stocks that should be on your list this morning. Varsha is joining us with more. Varsha.
Good morning, guys. So let's start with KEC International, where it has secured order of almost 1,300 crores. The order is for transmission, distribution, and civil and cable projects. And year-to-date order intake stands at almost 13,000 crores. Then we have Krishna Diagnostic, where it has received contract from Commissioner of Health Services, Maharashtra. This is to provide MRI scan and CT scan services in 17 districts in state hospitals. And lastly, we have Somani Ceramics, where it has commenced a commercial production of subsidiary company in Gujarat to produce large slab tile of 4 million square meters per annum, and with investment amount of 185 crore. And this manufacturing facility has the capability to generate almost 250 crores of revenue at peak utilization.
Okay. Well, interesting. Well, a lot of companies are opening up their newer capacities, and that could be an interesting piece. I mean, I think at some point of time we need to try and figure out what is it that, which are the companies that have opened up newer facilities in the last 3 months, and what could it do to their Q4 numbers, arguably FY25 numbers as well. I think one of those companies could be Electra. They're opening up another facility in the next 3 months, which will take their manufacturing capacity to 10,000 buses. The stock up about 0.5% after numbers yesterday. Let's see if there is more in store. We'll of course talk to the management later on as well. Other management that we're talking to today is BSC, and that could be an interesting one too. But amongst others, Interglobe Aviation could be a stock in focus. An interesting note by Citi when they've rolled over targets, upped the target price just about 0.5% higher. The stock has kind of consolidated at these levels for a while now. Do you like this aviation stroke airport space, Kunal? And within that, GMR Airports, Interglobe Aviation, SpiceJet, anything on the charts?
So, Niraj, if I look at the chart of Interglobe, I think this counter was more or less in sideways consolidation in last 1.5 months. And the support is placed at around 28.45. And if there is a positive, the news flow coming in, one can think of accumulating this counter with the stop loss of 2,800. I think this sideways consolidation, which is with the positive bias, may just lead the counter to 3,200 mark in the time to come.
Okay. Well, we'll watch out for that one for sure in the session today and over the next few days. Just trying to see what else. Has NTPC opened down? Can we just pull that stock up? And has Sunteck Realty opened higher? So NTPC, yep, down about close to 1%. Sunteck Realty, which has got new projects, gross developable value of 3.5%, or 3,000 crores, up 3.5% today. Nirav, from the Mumbai MMR real estate place, do you like anything, and in particular, any view on Sunteck, which has just done these new announcements?
So, as we had pointed out earlier also, that the best of real estate is yet to come, and I think we maintain that view. I think Sunteck looks quite good. But apart from that, yesterday we have seen one announcement which is coming from Man Infra Construction Limited, because they've announced their new project. That stock is looking quite exciting. We like Godrej Properties, we like Century Textiles. So overall, the realty space is looking quite exciting in trade.
Since we're talking about realty, pull up a counter called Hemisphere. That stock up 12% in pre-open. Hemisphere Properties. We talked about Venus Pipes in our stocks to watch list on trade setup, and that's looking like it's off to a roaring start, at least in pre-open. Very solid numbers for this quarter. Kunal, you track any of these counters?
Certainly, Hemisphere is the counter which I like the most, because there was a consolidation breakout near to 150, and then since then the counter is just entering into, it has just maintained its higher top, higher bottom formation. So at the present level also, this counter is now heading for the all-time high. So I think with the stop loss of around 190, one can think of accumulating, because it's a gap of opening in today's session. I think a bit of cool-off will make the risk-reward ratio favorable. But yes, certainly one can initiate a buy, and the targets can be as high as 240 to 245.
There are a couple of other companies that posted earnings. So you had Nippon Life India Asset Management saw a pretty big jump in earnings. Nuvoca Vista Corporation stock is up about 3.5–4% in pre-open trade. They've posted a net profit of 31 crores versus a loss of 75 crores in the same quarter last year. So very, very big jump coming in on numbers. The stock in pre-open is also not looking too bad. Muthoot Microfinance, they've recorded a net profit of 125 crores versus what we saw in the last year. So they've seen a gain of 120%, 6% on Muthoot Microfinance. So these are smaller companies, but very sharp moves and very solid set of numbers. The gain, they've also seen an increase, an expansion of net interest margins by about 86 basis points. So good numbers there from Muthoot Microfinance. Mahindra Logistics, if I can get that one up too, reported numbers. We will be connecting with the management at some point later on in the day. Worth mentioning that the stock is getting whacked 4% lower on back of disappointing numbers. Aditya Birla Sun Life as well, they've reported a strong quarter, 26% growth in net profit, aided by other income. The stock is up 3.5%. Nirav, any of these companies did you track? Okay, I guess you've got 25 seconds to go, so as we are gearing up. Niraj, lots of smaller companies that are reacting very sharply to earnings. You've got Nuvoca on one hand, you've got Mahindra Logistics on the other, Aditya Birla, Nippon. Be interesting.
Yeah, you and Tamanna will have your hands full. The market may just kind of meander and open. So let's see how we start off. An eye out for oil upstream, Adani Group companies, as well as the result reactions from ITC, BAF, and some others. Let's pull up the market as they open this morning. Well, you know, quite a pale shadow of what the implied open was. Let's see if we pick up steam. Maybe the mid caps and small caps could have started better because they have this want of doing it for a while. Banks certainly have started better than the Nifty, which is a good sign, maybe. Nifty mid cap 0.5%, small caps must be more than that, 0.67%. Every single day for the last few days, we're having the small cap index start off really, really strongly. It's only later on that the large caps are overtaking. Let's get the heat map and see what's moving and what's not. First, the losers, BAF, or Bajaj Finance, 3.5% lower. NTPC 2% lower. FinServ is a derivative of Bajaj Finance. So this row is entirely a result reaction row. The top 4 losers are down because of fundamental factors, which is that the results have been below estimates for them. On Bajaj Finance, the brokerage notes as well, not quite constructive. Of course, it is an expensive stock, perennially is, and therefore needs to clock in gains every single quarter. What's done well? Well, ONGC certainly participates, but Reliance does not. So that's the first kind of takeaway on open today. ONGC is up another %, Reliance is not. IT is not doing too badly. So Wipro, Infi, Techem, TCS are all in the list of the top 10 gainers, which is good. Dr. Reddy is marginally higher. A bit of a defensive mood, if you will, because you're seeing pharma out there, you're seeing IT out there. And while Bank Nifty is doing well, not a single bank in the list of the top 10 gainers on the Nifty. The top gainer is Dr. Reddy's. Wonder if I missed a piece of news there, but that stock is up about 1.5%. So the story this morning is not actually as much about the gainers because IT is ruling the roost there without any particular reason, but about the losers, particularly Bajaj Finance, which is down about 4%, followed suit by NTPC, which had a weak quarter. Tamanna.
Yeah, you're absolutely right. Dr. Reddy is up ahead of numbers expected today, and after Cipla, a lot of expectations there. So that's perhaps why you're seeing Dr. Reddy's up there. Maybe we're underestimating the impact of the Red Sea crisis in crude because ONGC continuing to show some strength, as Niraj said, and of course your IT pack. But let's get to the specific stocks which are reacting. Piramal Enterprises, I'll start with that. Numbers weren't too enthusing, but it's doing okay on the charts right now, even though brokerage reports were a little concerned. The big pain point over there is the AIF write-off. So maybe that's priced in. Venus Pipes, like we said, very solid quarter coming in, export push as well, and that being rewarded with an 8% uptick this morning. GAIL is another one I want to see. A lot of deals in the pipeline, no pun intended, but also a City buy call over there with a target price raised to 195. So some improvement there, but not really firing. I want to see what's happening with Suntech. We've been talking about Suntech Realty, a 3,000 crore project, a very key, I would say, posh areas of Mumbai, Nepean Sea, Bandra, Bandstand. That's talk about 2% up. And let's look at what's happening with your telecom pack. Vodafone Idea had numbers yesterday where losses actually narrowed. Their subscriber loss per month, which is a continuing story, that also has reduced. So Vodafone, they're not doing too badly. These are some of the standouts this morning, but the list of what's reacting in the broader markets is much longer, isn't it, Samina?
it's an extensive list. Lots of stocks that are moving across the broader market. Smaller in nature, but sharp moves largely on back of earnings. Let's quickly take you through what I'm picking up on. So while, of course, Niraj indicated that Bajaj Finance was seeing some pressure, you've got the other group companies also looking bad. So Bajaj Finance is seeing a cut of about 2.5%. A few more names that are reacting to earnings. So Aditya Birla Sun Life, if you can pull that up very quickly on the screen. Earnings reaction on Aditya Birla Sun Life, the stock is up 3%. Marico, again an earnings reaction. Godfrey Phillips as well an earnings reaction. Marico is up marginally. Godfrey Phillips also not doing too much in early trade this morning, trading with a cut of 0.5%. Well, Nuvoca Vista, if I can pull that one up, good set of numbers. The stock should be reacting well. It is up about 1% on. Nippon Life India Asset Management Company, the stock is looking like it's having a weekday, actually 0.7% lower. KEC was in focus. They've managed to bag a big order. Let's see if the counter is reacting to that. 2% on KEC is what we have. Krishna Diagnostics, they've signed a big order with the Maharashtra government for MRI scanning. The stock small in nature, but still seeing a move of 2% this morning. Restaurant Brands on back of earnings is seeing a reaction. The counter, if I can pull that one up, is trading with a gain of 5% in trade. So you've got Restaurant Brands. You've also got UTI Asset Management Company. 6.5-7% higher is what we have. Infibeams 8% on that stock. Rights, IRB Infra continues its rally from yesterday. Brigade Enterprise, so other real estate names also not doing too badly in trade.
NHPC, there was a large trade just in the pre-open, and you've seen NHPC up about 4.5%. Coforge not doing badly. If you look at the tech pack overall, tech is seeing some kind of a resurgence and maybe a defensive play, as Niraj said. Too much happening this week to take any strong calls. Yeah, perhaps that's what you're seeing play out. All in 1 week coming in. On budget day, you also have your Nifty expiry, you have the Fed notes, and of course budget. And
you've got auto sales.
And auto sales. In that list,
if you just want to make it more exciting for us.
In that list,
in the grand scheme of things.
In the grand scheme of things, perhaps nothing major over there. Auto at the most, if there's something big on EVs, maybe then. First thoughts from Kunal and Nirav post markets open and how they see it all panning out. Kunal, I'll start with the bank Nifty, which is quite muted this morning. But on the other hand, look at the Nifty IT up about 1% here. Any positions you would take, or are you also sort of sitting on the fence before the big events this week?
See, being honest, if you look at the Bank Nifty, it's been an underperformer. And if you look at the today's open, it's still within the range of yesterday itself. Yesterday's 945 high was almost the same as the present high, which is 45,923. I'm talking about the futures level. So I think I'll remain cautious as of now on the indices. As far as the stock specific moves are concerned, certainly one can think of accumulating many counters, which we may discuss. But on the indices front, I'll remain cautious. And today's high will be something as to watch out as a new breakout level for both the indices. So for now, it's a sideways consolidation with the day's high as a breakout. One can initiate a buy on Nifty and Bank Nifty.
Okay, some other stocks which are moving, by the way. Shriram Finance from yesterday's top winners is up 2.5%. Oil India is up about 2.5%, so that's doing well. Shyam Metals ahead of the numbers is up 2.5%. And Calcutta Electric or CESC is up another 3.5%. So those are a few names to watch out for. So that's the other pocket. A couple of Adani Group stocks are actually down today. Adani Energy Solutions and Adani Green are trending slightly lower in trade this morning. Nirav, we haven't spoken to you about something that you like in a market like this. Anything in the last 2 weeks that has caught your eye in terms of either results or valuations looking reasonable? What is it that you would recommend your clients?
So as we had pointed out earlier also, that cement is a sector which is looking quite attractive. If one were to look at the results announced by even smaller companies like Shri Digvijay Cement, or if you take larger companies like Ultratech Cement, JK Cement, Dalmia Bharat, I think the cost pressures have been easing, and I think that the volumes have started picking up from mid-December. So I think we'll be very optimistic as far as the cement space is concerned, and the overall thrust and focus on infrastructure in the economy augurs extremely well for cement companies.
That's a few names that Nirav is enjoying or liking in the current market conditions. But your big loser is your Bajaj twins on the index. Disappointing numbers from Bajaj Finance. Brokerages are disappointed. The stock is down with a cut of about 5% in trade. I believe Harsh is standing by. We'll come back to him in a minute. But Kunal, you want to quickly tell me what you think about the Bajaj twins this morning after market opening? Would you consider initiating a trade on either of those counters?
So again, on the Bajaj Finance, as I mentioned in the beginning itself, 7,000 to 6,900 kind of levels are something to watch out for. 6,950 to 7,000. So by any chance, if it manages to close about 6,950 in today's session, I'll certainly be a buyer with the favorable risk-reward ratio again in mind. So today's low can be a good stop loss. But for now, I'll stay away. I'll wait for the closing of the day. And for the short-term traders, one can consider the 15 minutes high and low as a new breakout or breakdown level to initiate the trade only for intraday. But otherwise, this is a good level to initiate longs if the counter manages to close about 6,950.
Do you try UTI Asset Management by any chance? It's up quite sharply, 9% gain this morning. I don't know whether it's getting ahead of itself on back of some of its peers reporting numbers, but the stock itself is up about 9.5%, 10%, and of course continuing to gain.
Certainly. So since April 2022, this counter made almost 5 to 6 attempts to cross 915 mark, but it was a failure. In today's session, what we can see is a decisive breakout. It seems to be poised for a new rally from present level. One can think of initiating a buy at this level with the stop loss of 920, and the targets can be as high as 1100. I think the late running, like what we are seeing on the Nippon front, I think this counter may just catch up the rally in very short period of time.
Okay. Well, Nirav as well as Kunal, thank you so much, gentlemen, for joining in today and giving us those thoughts. So really appreciate your time this morning. Pleasure. Okay. Remember yesterday what created a buzz in Adani Enterprises at least was one of the factors was the Cantor Fitzgerald note. Now, detailing out that note slightly further, I think the analyst says that Adani's airport business may get demerged very, very soon after the completion of the Navi Mumbai airport. Let's dive into those details a bit. Harsh, what are the specifics for this?
Well, yes. So, Niraj, just for context, first off, the Navi Mumbai airport itself has a capacity of 9 crore, flyers or passengers, which is twice as big as the largest airport in the US, which is the Atlanta airport. Now, this in itself could be a trigger point, is what Cantor Fitzgerald has suggested with regard to demerging or spinning off one more of those businesses that Adani Enterprises continues to hold. Now, AEL itself currently owns 8 airports, 7 of which are operational. Navi Mumbai yet to be operational, expected to be operational by year end, and that could be the trigger point, is what Cantor seems to suggest. What they are suggesting is that passengers overall will grow at a CAGR of 21%. They are expecting revenue per passenger to grow at a CAGR of 5%, and therefore your revenue CAGR for the airports business alone would roughly be around 27.5% from the FY24 to the FY26 period. This is as per Cantor's estimates. And Adani owns 8 airports, accounting for roughly 25% of the airline passenger traffic and 33% of cargo. Now, if someone ought to own 5% of Adani Enterprises and Adani Enterprises demerges its airport business, the investor would obviously have a 5% stake in that business as well. So, making a case out with regard to how one more spin-off from Adani Enterprises could create more value, and the next one could be airports, is what the note seems to suggest.
All right. Meanwhile, markets seem to have taken a bit of a turn. Slightly, nothing major happening, but yeah, the Nifty Sensex in the red, so is the Bank Nifty. You're seeing energy stocks taking a bit of hit. Let's look at the biggest declines on the Nifty as we speak, and Bajaj Finance, the Bajaj twins actually will definitely be on that list just see what's happening. They're 4% down now. So it's the numbers which have seen the pain point. And in fact, after reporting mixed results for the December quarter, its consumer finance business also saw elevated losses, while Bajaj Finance has been cutting its exposures in the rural consumer lending business over the last few quarters. This quarter saw some losses in the urban consumer lending business as well. Rajiv Jain, MD and CEO, told analysts on the call yesterday that the losses in the urban business were transient, but that the lender has started cutting exposures marginally. Listen in.
You see in rural B2C numbers slowly go down, which is not how you see in urban B2C. So we'd rather be data dependent than anything else. I think that's the only point I would make at this point in time. Does not mean we are not to remain watchful. Is an important point. But remain data dependent. At this point in time, it looks transient, is what I would say. Given what we saw on B2C, on the margin, we have cut even urban B2C. We've actually cut quarterly close to 450 to 500 crores of business, because at some point India starts to be rural and urban as a mix. So we have in urban B2C on a preventive basis in the last 2 quarters more so, have actually 3 quarters have taken action already, and reflected in a 3% lower growth on a year-on-year basis. If you look at it, March quarter was 32-33%, is down to 29%.
All right, we're talking this morning to Aad Engineering. They've inked a key deal with Rolls-Royce. Vishnu Malpani, whole-time director, is now joining us on the show. Vishnu Malpani, very good morning to you. Can you give us more details about this deal? What exactly will you do for Rolls-Royce engines? What is the scope and size of the deal?
Very good morning. Thank you for having me on the show. I think it's a pleasure to be here.
Thank you.
So this is a very exciting moment for us. We have signed a long-term agreement with Rolls-Royce, and this milestone actually took us about 4 years to sort of get here. So this contract is about manufacturing, highly complex and critical components for the defense aircraft engines that Rolls-Royce has. And these components that we are making for them are very critical and, are coming to India for the first time. So we are going to be making these components for their defense aircraft engines. And this is a contract for 7 years overall. So, we will be doing the development for a year and then, production for about 6 years.
Mr. Malpani, can you give us a sense of the size of the deal? Where will you be doing this? What does it mean in the broader context of your top line, in the sense, how big a deal is this deal?
I think I won't be able to comment on the size of it right now, but I can tell you that, this is a starting point. This is sizable in nature though, but this is a starting point for us. It is a pivotal moment for us because, it opens a lot of opportunities for us. Making critical parts for military engines and for various military aircraft platforms is a very important thing. For us, it's a big breakthrough, and we believe, it is also an important moment for India because, for the first time, complex and critical parts for aero engines are going to be made. And we are definitely looking forward to it. We are going to be making these parts in our Hyderabad, facilities only. And, development is going to start immediately. We'll start producing it in the calendar year 25. And then from there on, the production is going to be starting, and it's going to take about 6 years, for this contract to continue. But having signed this contract with Rolls-Royce opens a lot of opportunities for us, on the civil aviation side and also on the, defense side of the business as well.
So Malpani, that's a good point. It opens doors for you in the aerospace, defense space. Are conversations underway with other players in either of these two industries that you've, of course, made a big bang entry with your partnership with Rolls-Royce with?
I'm sorry, can you repeat
I said
that?
any more conversations that are currently underway for similar partnerships?
So there are opportunities that are that we are working on right now, and I think I won't be able to share a lot of information because defense programs are generally very, very confidential. But I can tell you, good times for the Indian aerospace industry, and Aad is actually sitting on quite a few interesting opportunities, and I think we should be able to give you more information as we come closer to that period.
That should be in the next couple of quarters. Is that a fair assumption, Vishnu?
I won't be able to comment on that right now,
Okay.
but yeah, I mean, we have interesting opportunities that are...
A quick take on closure. You did say you go into production for 1 year, and then the next 6 years is when you actually go out and execute. You want to give me a sense of timeline? Any other milestones that need to be completed? Anything that could be a determining factor for next steps for Aad and Rolls-Royce partnership?
So I think, majority of the work, it takes a lot of entry barriers to sort of cover till here. And for us to get to this point of signing a long-term agreement with Rolls-Royce, PLC has taken us about 4 years. So we've done the necessary work that was required. Now it's about, now these, components that we have for these defense platforms are awarded to us. We are going to develop this. So there's going to be qualification process that's going to happen over the next 1 year, and then we're going to take them to production. So there's no more strategic milestone if you're looking at that. No, I think we have to start work immediately and get to the production of these.
Mr. Malpani, you talked about how this is a pivotal point for your company and for India in defense manufacturing. This is, I suppose, part of the larger Make in India push. I want to understand if this entails any technology transfer for you, and how does this help you in sort of furthering the capabilities of your company?
So this is no technology transfer that's happening. So we are chosen as a strategic partner for them, and the idea is to, if you look at, if you recall any of my previous interviews, on Aad Engineering and our capabilities, we manufacture highly critical and complex, components for the aerospace industry, aerospace and defense industry, energy industry, and oil and gas industry. So we have been making critical components for the company for over 15 years, and this is a logical extension to what we've been doing. So we have been making these parts for energy for about 15 years now. Aero engines, aerospace and defense is, it's a starting point for us, and this development obviously talks about the advanced manufacturing capabilities that Aad Engineering has, and obviously the trust that a global, leader like Rolls-Royce can place, in an Indian supply chain. So we are going to be a part of their global, defense manufacturing supply chain, and it also contributes to the Atmanirbhar vision, Atmanirbhar Bharat vision of our, Prime Minister, which aligns with the vision that our promoter has for the company, because we are very patriotic, and we believe that India can actually create a very strong engineering story, and I think we are here to demonstrate that with our capability.
Vishnu, congrats on that. Neeraj Shah here. Just two quick questions, if you will. So on the global piece, you would be one of the key suppliers for something like this for Rolls-Royce. Can you tell us something about that?
Yeah, so we are, we are going to be a strategic supplier for Rolls-Royce. Yeah.
Only ones in India, I understand. Right. But on a global level, how many other companies do this? Anything like that? Any other idea? Any idea like that?
So there are established players. I would say that there would be about 4 to 5 global players that have been around for over a couple of decades that have been doing this.
Okay.
So we would be entering that, and that's when I said that it's a pivotal moment for us, because this is just the starting point for us.
Got it.
This is our first step with Rolls-Royce defense. There are several opportunities that are available on the civil aviation side and also on the defense side of it. So it's very interesting for us to work on this, develop this, and add this to our capabilities. So we're really looking forward to it and excited internally. Yeah.
I heard you say that there is a 1-year development and 6 years of manufacturing. Do revenues start immediately, or they start after 1 year?
So development period is when you are producing these parts. So revenue generally starts post a year. So we are looking at calendar year 25. Yeah.
Okay. Yeah. And margins for this, Vishnu, are these in line, better than your normal margins, or lower than the normal margins?
I won't be able to comment directly on the margins of the contract, but I can tell you, for us at Aad, we look at margins at a blended level. So we have been delivering about 32 to 33% EBITDA at a company level, and we will continue to do that, right? Even including this contract.
Fair call. My last question, I know you mentioned you don't want to talk about numbers, but you mentioned that this could become large over time. So don't give me the exact number, but let's say you start with 100 rupees when the revenues start. Over 5 years, how large do you foresee this to become, Rolls-Royce? From 100 to what?
No, so I really won't be able to comment on that.
Call.
I think, and since this is also a silent period, I think we will be able to give you more color during the course of our discussions in the future.
Okay.
Sure, clearly we've tried every angle to get those numbers from you, but
we appreciate it's a silent period.
Yeah. Just one quick question. Have you made or would you be making significant investments in order to execute this deal? You did say it's a 1 year of production time and then you go out there and execute in that sense. But what is the quantum of money that's been invested in this to get this deal? Because I'm guessing it just didn't happen.
So we, at this point, honestly, we won't be able to talk about investments for this specific contract as well. But, at Aad, we are prepared. We have been preparing for this, milestone for a couple of years. And we knew this was coming. So we have plans for us internally, investments, etc. have been planned because this is an opportunity where, because, you can imagine being a part of the defense supply chain and making critical components for defense platforms. It's a very big milestone. So internally, we have, planned our investments, teams, etc., to be deployed for this milestone. So we are ready, I think, and in the coming quarters or, in a year, we'd be able to talk more about the program freely when, we're in the development cycle. We'll have more flexibility to give you more information at that point. So I'll be able to give you more information in the coming years, but I can tell you that this is a very, very exciting moment for us, and we hope that we're able to communicate that to you as well and let you give you the understanding that we are powering India's advanced manufacturing capability.
Sure. Vishnu, congratulations. I'm sure it's a pivotal moment. Make the most of it. Congratulations on this. Thanks for taking the time out and speaking to us today.
Thank you. Thank you so much. Thanks for having me.
Yeah, the pleasure is ours. On a short break, time for a short break. On the other side, we connect with KV Pradeep. He is the chairman and managing director of Electra to decode their quarterly numbers. Electra Green Tech came out with the Q3 numbers day before. Revenues were up 33%. Margins expanded marginally. And despite finance costs being up, the net profit was up about 77% from 15 crores to 27 crores. The conversation with the management is not as much just about the quarter, but about the opportunity size that lies ahead. Mr. Venkateshwara Pradeep, he's chairman and managing director of Electra, joins us right now on the show. Mr. Pradeep, good having you. Thanks for taking the time out. Pleased with the quarter, or would you have hoped for more?
Yes, I am okay with the quarter as well as for the others also, other details also, I am okay.
Okay. Tell us what went right. I mean, this 33% uptick in revenue. Now, you've been on record with the number of orders in the pipeline, a few orders that you won, capacities coming on stream. Is 33% about the right run rate that you would have expected at the end of Q2 for Q3, or would you have hoped for more?
As far as Q3 is concerned, let me talk about Electra Green Tech. If convenient to you, I would like to explain briefly about the strength of the Electra. As you know very well that Electra is one of the largest electric vehicle manufacturing companies in India. We have an order book of 8,000 plus as of today, 8,000 buses plus as of today. And probably you may be knowing that with a single charge range, highest number of kilometers can be operated by Electra's products. Number 4, past 7 years we are into this business with a strong portfolio of various models. And also, I'm proud to say that we have done 20 crore plus kilometers on Indian roads. And also, we are working on various new models which suits to the Indian requirements. And we are developing those products. Very soon we will be coming up with those products. Apart from that, also I would like to mention here that Electra has developed electric tipper, which is the first kind of its model in India, and we are the first electric tipper manufacturer. And our tippers, almost 150 numbers, are working in various infra projects across the country. So this is the brief about Electra Green Tech. As far as your question is concerned, Niraj, in Q3, definitely we have expected these kind of numbers. And as far as Q4 is concerned, we are planning to keep the same EBITDA levels. And as we have done about 865 crores top line, and we want to add another, in the same pace we want to continue the production, and even the EBITDA also we want to be at the same level for the year FY24.
Mr. Pradeep, great to know about what you've done thus far. I would love to understand about what's up next. You've done an X amount. I heard you say that you would probably look to emulate the EBITDA numbers in Q4, which is good to know. What about the kind of delivery that you've done or deliveries that you've done thus far? What is to be anticipated in Q4? And then I'll get on to the capacity expansion and targets for the years ahead.
Yeah, Niraj, as far as Q3 is concerned, we have delivered 178 numbers. Both buses and tippers put together, we have delivered 178 numbers. Even in Q4, we want to plan the same numbers that we have done in Q3.
Okay. This is interesting. So I'm just trying to piece together this. Please correct me if I'm wrong, Mr. Pradeep, but you're working towards this new greenfield facility, which probably has an annual capacity of 5,000 vehicles operational by Q4. So your capacities are now in size. The order book already at 80 to 100 buses, and you're probably bagging more orders in times to come. How does the execution ramp up happen, let's say FY25 and beyond? Give us some idea about that.
Yeah, very good question, Niraj. So as far as the new facility is concerned, I would like to explain you about the capacity expansion. We have acquired 150 acres of land nearby the Hyderabad airport, wherein we are building a world-class manufacturing facility, which we have started 8 months back. And very soon, probably in the month of Feb, we are going to start using the facility partially, and we want to start the production in that partially made ready facility, wherein the next quarter numbers shall get delivered. As far as the other part of your question, for the numbers which are required to be delivered in the year FY25, we are planning to have 2,500 numbers in next year ending FY25.
Wow. Mr. Pradeep, please excuse me if my math is a bit awry, but assuming that you mentioned 178, I'm rounding it off to 200, and therefore I'm coming to a number of, let's say, hypothetically about 800 to max 1,000 buses that you probably have done in FY24. You were talking about a number of 2,500 buses or vehicles in FY25. That means you are nearly targeting 150% growth, or more than 2.5 times growth in FY25 or FY24 as things stand.
FY25, what the numbers I'm talking is FY25.
Yes.
Yes, definitely it is 2,500 numbers which we are going to deliver in our new facility which is being built.
Wow. Okay, so how does typically in this business, because it's a new business, so please humor me and explain to me, how do the economies of scale work out when your numbers move up from whatever 800, 900 or 1,000 as they may have been in FY24 to maybe 2,500 in FY25 to whatever number comes up, let's say in FY26 or 27, how do economies of scale benefit you to margins, for return ratios and for cash flows as well, Mr. Pradeep?
Yeah, Niraj, the economics, the way how it works out is more than the organization, it should benefit to the public to whom we are going to provide the services. See, more the numbers we produce, definitely the cost would definitely be less. So the amount of production that we increase, the cost per vehicle shall also come down, with which the end customer would definitely get benefited, and our product, as we envisaged, would definitely be would become nearby to the diesel vehicles in coming 3-4 years time. So that's the aim. What we have planned, and what we have aimed is to reach out to those numbers. And as you rightly mentioned, the more the numbers, definitely it is the economics is going to have a diagonally different direction.
Great. Mr. Pradeep, would it be safe to assume by what you just said that with falling costs, but you mentioned that you want to bring the cost of the vehicles down, that you would not necessarily look to expand on the margins, but for the next couple of years, the idea would be to expand volumes, gain market share, and therefore you might be fine with maintaining the margins as they are right now as opposed to margin expansion?
Correct. Probably this we want to maintain EBITDA of 12.5%, where today's EBITDA levels are 16.5. So we want to maintain 12.5% EBITDA levels in coming years.